As promised, 35 different industries, experts from each industry. We talk about the challenges, we talk about the hardship, we talk about the opportunities. So here live at Expert 35, we've got a huge lineup. Obviously today we've got the mortgage professor, Craig Levin. Thank you for being here today, Craig. How's it going?
Good, man. Thanks for having me. I feel honored to be here.
No problem, man. Thank you for being with us. Expert 35 has got a big lineup. We've got security. We're going to have how to start a nonprofit. We've got the flyover Houston, which I think is going to be super fun, and sports this week because what's going to happen, like what's happening with all these seasons. And really, that's Texas is opening up back up again, just like a lot of other states are opening. And at the same time, there's all these changes in the mortgage industry. There you go Stros. So join the conversation. Text Expert35 to the number on the screen. You'll be able to follow us, understand what the latest is. And today, like we said, we got the mortgage professor, Craig. Man, tell us a little bit about the industry, right? The mortgage industry has been rocking, but it's also been rocked. What's happening in the mortgage industry?
Yeah, a really great question. The mortgage industry is chaos right now. There's two aspects of it. One aspect is the banks, the lending companies do not know what's going to happen today, tomorrow, in 6 months, a year. They're really nervous about lending. And that has resulted in a lot of guideline changes. A lot of small companies can't lend. A lot of big banks have made significant changes where they're not doing certain loans anymore. At the same time, rates have dropped significantly. So a ton of new business has come in, a ton of refinances have come in. And the banks are kind of saying, wow, we have all this business today, but is it good business? What are we going to do in the future? A whole lot of nervousness really is what's going on in the industry today.
Well, and it's nervousness because the markets were kind of the first things, like, oh, the financial market crash and all this was going on. But then, COVID took us into this whole lockdown. But then interest rates were actually they've been moving around too, and not necessarily in the same directions as the market, right?
Yeah. So typically, stock market goes down, rates go down with it. But right now, rates are not where they should be. Rates should be much lower today than where they actually are based on the economy. But again, banks are a little bit nervous to lend money. Overall, though, rates are absolutely amazing if you look at it in a historical perspective. If you can pull up the 5-year chart, you'll see where rates are today versus where they were, 5 years ago.
All right, let me pull up the 5-year chart. There we go. I'm going to hide you a little bit so we can see that. There you go. You can see it right now.
Right. So if you can see there, 2000 July 2015, around 4%. They dropped July 16th. They skyrocketed right up there. That was right after Trump got elected. They went up. They took off in 18 and 19. They came back down a little bit now, and now you see a little yo-yo effect since January. So basically, if you got a mortgage from January 2017 and you haven't refinanced, rates are lower today. You're probably worthwhile looking into a refinance for you. If we go to the year-to-date chart for rates.
Well, real quick, we got a couple questions popping in. So let's address one of these. This is kind of timely. Even though interest rates are historically low, how are lending requirements changing?
Yeah, fantastic. So first of all, you have to be employed. If you're furloughed or you're not working, the banks do not want to lend to you. The second thing there is that, again, there are a lot of guidelines that are tightening up, right? So a lot of the big banks, I don't want to name names, have now requiring 20% down on certain loans. You have to have better credit. A lot of loan programs, FHA and VAs, for example, that were 580 credit scores, those are now 640 credit scores. Banks are nervous to lend money. And if they're nervous to lend money, the credit score requirements tighten up.
Right. And this is the same way you were just saying. Tammy's asking, can you refinance if you lost your job?
No, you have to show ability to make your payments. So if you don't have income coming in, then the banks don't want to lend you money, obviously, because they're afraid you can't make your payments.
And then we've got Jennifer asking, tell us why it's a good time to buy.
It's an amazing time to buy. Again, rates are really low today. So historically, if we look at that 2019 chart, for example, in 2019, January, February, rates were around 4.5%. Here, go to the 5 year.
This is the year today. You want to go to the 5 year? Let's go to the
Yeah,
5 year.
go to the 5 year. So if you look at the 5 year, look at January 2019. That was a high point, right? So the rate then was high fours, and now they're in the low threes. So just
We can't
buying
even see it
power.
on this graph because Jennifer's comments in the way. Here, I'm going to take Jennifer. There, look, it's so low.
You can
There you go.
afford
Wow.
you can afford so much more today than you could have just a year and a half ago.
I'm going to throw that affordability chart on here because I think that's really important, right? Here we
Okay,
go.
perfect. So let's just look at $400,000, for example. Let's just say January 2019, you could have gotten a rate around 4.5. That's a payment of 2026. This chart was made so long ago, it doesn't even have the rates today, which would be in the low threes. But let's just use the 4.5 again on 400,000. So we're comparing 4.5 versus 3.5. I apologize, 3.5. That's a savings of 231 a month. If you lived in the house for 10 years, that's a savings of 28,000. And if you lived in the house for the life of the loan, that's savings of 83,000. So just because the rates have dropped, you have more buying ability. You're going to save more money over the life of the loan. The other thing too is that there's a lot of homes on the market. People are wanting to sell their home, so it's a buyer's market. So low rates, buyer's market, it's a great time to buy.
Here's a question talking about buying, and I got to take your name off because it's like, I want to rent my house. The refinance rates are lower than current rates. Should I refinance?
Yeah, you just got to ask yourself, do you want to have this as an investment property to get a revenue stream to rent it? Or would you be better off selling it, taking some cash out and buying it? It's just a good question to have. There's a lot of technicalities there in regards to investment homes. Investment rates have higher interest rates than primary rates. So you just got to be cognizant of that. I'm happy to go into a deeper conversation with you if you'd like to reach out to me afterwards. But overall, it's a great time to refinance again because rates are lower than the current market.
And then this is interesting. Like, where do your current interest rates need to be currently to make it worth doing a redo?
All right. First of all, if you're above 4%, you got to get a new quote today. You just have to. Beyond that, if you're lower than 4%, it really depends on two things. What's your loan amount and how long do you plan on staying in the house? So the bigger the loan amount, let's just say $1 million, you might be at 3.875 or 3.75. And if you only drop to 3.5 or 3.4, yeah, you're still going to save $400 or $500 a month. That's worth it. But if it's a smaller loan amount, like 100,000, 150,000, and that same rate scenario, you're only going to save 50, 60, 70, 80 bucks. Is it worth it? And then the other thing you need to do is just look at how long will you live in the house? How long does it take you to break even with closing costs? We'll do a cost analysis. If your goal is to live in that, if your goal is to live in the house forever, it's probably worthwhile. If your goal is to sell the house in 2 or 3 years, and you're only going to break even in 2 or 3 years, it's probably not worth it.
Right.
So it's a case-by-case scenario.
So that's part of it. Like, how can somebody know if refinancing is right for you? But you said that it's not just refinancing. It's not just lowering your payments. There's a couple of benefits, right?
Yeah. So there's actually 5 benefits to refinancing. So rate reduction, obviously, you lower your rate, you save some money. Term change. Maybe you got an adjustable rate 4 or 5 years ago. Rates were in the low threes. Today you can get a fixed rate, low threes. Might as well switch it over. Or I'm doing a ton of this right now. Is I'm taking people from the rates in the fours from a 30-year fixed, and we're dropping them to a 15 or 20-year fixed. The payment's about the same, right? But because the rate's dropping, but the term's going up, so you're going to have the same payment, but you're going to have less interest over the life of the loan. Cash out's a big thing. You might be stuck in the home all summer. Maybe you want to put in a pool, maybe home improvements. Maybe you just want to get some cash in case, a job loss or something like that. So some people are refinancing, pulling cash out. Debt consolidation is a big one. Maybe you want to pay off your credit cards, pay off your cars, pay off some debts. You can do that. You can roll it into your mortgage. It tends to be cheaper. If you have, say, $10,000 of credit card debt, you're probably making a payment $200, $300, $400 a month. If you roll that into your mortgage, that's only adding $40 a month to your mortgage. Every $1,000 you borrow is only about $4.
Wow.
So rolling in debt's a good thing. And then also you get tax incentives. If you're paying credit cards, you don't get any benefits to that tax wise. But if you roll it into your mortgage and you're paying more interest, you get to write off your interest up to a certain point. Consult your CPA for exact details on the numbers for that.
No, and we're going to have next week, we're going to have Reggie, one of the expert CPAs, talk about those tax benefits, and we can kind of combine those. We're going to release you on the notes as well. So you're going to put a lot of this info in the comments so people can follow up. Here's a pretty good timely question. People are asking, what's your advice for people who can't pay their mortgage?
So if you can't pay your mortgage, the government passed a thing called the Cure Act, where you can call up your mortgage company and you can tell them, I'm having financial difficulties. Can I defer my payments? Yes, you can defer your payments. It will not affect your credit scores. However, there's no such thing as a free lunch, right? You will have to repay your mortgage back at some point. Now, every servicing provider has their own set of rules. Some will say they'll add 3 months to the end of your term. Some will say you just got to pay additional monies when your mortgage starts to be paid again, come back due. You just got to be very careful of it and read the fine print. What I would say to you is don't do it if you still have your job and you can afford it. Don't take the deferred payment just to try to save a couple bucks. If you're working, make your payments. It's going to catch up to you eventually, and it might be a financial hardship when it comes back.
Right. Like you said, there's no free lunch. Do it, but be financially responsible, because if you're saying in some cases, some people take that benefit, but then they won't be able to refinance later because they took that benefit, right?
Yeah. So if you do it now, let's say you're working and you say, I get 3 months free on my mortgage. It still says on your credit report, deferred payment.
Right.
And then you come to me and say, hey, I'd like to refinance my house. I'm at 4.5. I'm like, great. I'll save you a ton of money.
Right.
Oh, sorry. You're in deferred payment. You got to come current. Well, now you got to make a lump sum payment 2, 3, 4 months for me to refinance your house.
Right. All right. My favorite part of the show is 3 things people should do right now, right? Take advantage, and how can they get through all this? Go.
Right. So again, rates are so low today. I mean, historically low. You need a refinance. If you are definitely above 4, you need to give us a call. If you're in the high 3s, it might be worth it for you. Great time to purchase a house. Again, rates are low. You have more buying power. Ton of homes on the market. Great time to buy. If you're sitting on cash, look at an investment home. Listen, people are going to be selling their homes. They need a house to move into. Great time to buy investment homes. But refinance. If your boss offered you a raise of $2,000, you would never say no. If you can refinance and save $2,000 a year in payments, still worth it, right? It's still worth you saying yes.
Absolutely. That's a great point. And, we're going to put your comments. You're going to talk about the resources that are available for people to refinance. Somebody's asking, how long does it take to refinance? Is this like we'll go on a website and done, or what's the typical time?
So bank specific, the bigger the bank, the longer it's going to take. The smaller the company, the less time it will take. We're averaging about 60 days right now, which is actually pretty good. Some of my competitors are 90, 120 days. We're under 60. So, and that's just because so many people are refinancing, the pipelines are full.
Right, but you get the benefit of you lock in the rate for those 60 days, right? As long as so this is the time because the rates are low.
Right? Exactly right. So you call, let's say you call, we come to terms. I'll give you a cost analysis. You say, let's do it. We lock your rate in today. You're good for 60 days. And listen, if it goes to 70 days and it's our fault because we have so much volume, we'll take care of it. You'll still get that rate.
Awesome. Well, Craig, super timely. Thank you so much for being on the show. This is exactly what people needed to hear, and just hear from somebody that sees it every day. So thank you for being on Expert35.
Hey, thank you, Gabe. That went super fast, man. I appreciate it.
Expert22, text Expert22. You're going to get direct access to the professor, the Craig Levin, and 17 years of experience and just amazing information. Super timely. Yes, don't take don't take these benefits if you don't need them, because it's only going to hurt you, or eventually, you're going to have to pay that extra next year with the taxes. We didn't even really get into like the escrow on all those taxes, but we're going to let you go into the chat. You got a shout out from Danny Shiftel. You got people, you need to go talk to these people on the chat. And, but just wanted to really thank you for your expert advice. Thank you, Craig. Thank you for joining us.
All right. Thank you. Have a good one.
All right. And we're going to put you guys on with, Craig's got a little video that we've never tried before, but we're going to put a little video as we get out. And thank everybody for joining us on Expert35. We've got security. We got starting a nonprofit. We got sports opening back up. We really appreciate everybody joining us. Check us out live at 9:35 on Expert35.
We educate during difficult times. We collaborate at Expert35. This is for a better tomorrow and a better today. Let's come together, and together we will find a way. You got questions, we got solutions. You got problems, we got resolutions. Visit Expert35.com. No need to worry, just remain calm.